Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a breakdown of the action in today's session, where we saw an up and down day, but as always, we've got a couple of interesting tickers to check in on.
Yeah, we're going to take a look at Onsemi, KBR, and HRMY Biosciences, which showed relatively bullish action today.
Okay, we'll do that. But first, let's take a look at the major indexes. And we're going to kick things off with a look at the Nasdaq Composite, which you can see on your screen here. So in the market today, as we said, it was an up and down session. So the Nasdaq closing with a slight loss, down about 0.2%. So the least amount of damage there, the S&P 500 down 0.7%. The Dow with the worst hit today, down 1.2%. And the Russell 2000 was able to finish in the green, it looks like, up about 0.2% heading into the close here, Ed. So your thoughts on where we ended up at the end of the session?
Yeah, we had some headwinds. Pelosi's trip to Taiwan raised U.S.-China tensions, and then we had a couple more dovish Fed policymakers saying, yeah, we're not done with this inflation fight. I mean, it seemed to be more about tone. It didn't really seem to shift on that front too much, really, what they were going to do, but set the stage. Still, I mean, look at it. I mean, the market basically here on the techs, they sort of held right around their early June highs. The Nasdaq is sort of leading. The other indexes aren't as strong. We'll look at them in a little bit, but they're holding up reasonably well here. Given the action, we've run up quite a bit. So pulling back modestly on the Nasdaq and S&P. Yeah, some big moves. So you'd almost want to see some pauses. I think that'd be healthy for a lot of stocks which have run up. And it's like, well, do you buy them now or do you buy them when a pullback seems just, that there would likely be one of some sort? So that could be constructive. I don't think today was too meaningful of a day. I guess the best thing is that it could have been a lot worse. It looked like it might be worse. The Dow wasn't great. There were some individual names that were weak in the Dow, but that tends not to be the leader anyway. And the Russell, as you said, eked out a gain at the end there. So, I'd say decent action. Just the trend has been your friend. Doesn't mean that every day is going to be your friend, but this day is still looking pretty healthy right now.
Right, and we definitely want that healthy market to continue as we're starting to see some positive earnings reports and the market really shaking off the negativity. One thing to point out that we were talking about on IBD Live this morning is this is a look at QQQ, which tracks the Nasdaq 100. The rally coming in light volume. So as we are right at some resistance from earlier into the year, so it would definitely make sense, as you said, to see some sort of pause here, which could definitely be constructive. And I think for the leading stocks, it'll be a true test. Can they continue to hold up these new market leaders that we've seen? Can they continue to work even if we do see the market pause or pull back? So
yeah, I mean, that's a good point. And the futures are down because there's some earnings that are going on. It's going all over the place probably right now with some things. Still lots of earnings, and you're right, the volume has been light. We still don't really know. So while the trend has been relatively positive, probably shouldn't still be too exposed. And whatever level of exposure you are, the more you're exposed, the more the risk is that you'll need to pull back fast if things do turn on you. So just keep that in mind. If you want to be aggressive, then that sets the stage for you may need to step back quickly.
All right, we'll have to see. And next, let's take a quick look at the 10-year Treasury yield, which we saw a bump up today, which we've seen a streak of declines, but breaking that streak today.
Yeah, I mean, not exactly. I mean, there was the hawkish Fed officials, and obviously it's been coming down. So some of it's just a bounce off of that. Honestly, at the very, very short end of the yield curve, like we're talking about the 1 month, 3 month, really wasn't a lot of movement. And if you were expecting really, oh boy, we're going to get a bunch of rate hikes or a lot more than what you had planned, you probably would have seen it there. So this wasn't necessarily, oh, run away, it's the Fed. It may have been somewhat of a safe haven kind of flow, but the trend has still been down a lot. And so I think, it's still below the 10-day line, still below a lot of things. So until that really moves a lot higher, still that's been a positive trend for the market.
That it has. And let's take a look at Onsemi, ticker ON, in the chip space here, up today by about 3% off its highs, but testing some resistance right around that 67 level after reporting earnings. We did see a slight slowdown in both the top and bottom line growth, but we did see Onsemi post some pretty strong numbers.
That's pretty strong growth, yeah. I think if there was a couple of possible entries. There was a trend line from the very top, that you could have drawn, that it sort of broke just before earnings, but that gets scary. I mean, even though that sometimes works, and we'll look at a stock where it did work, this fell 6% yesterday. So if you bought it right as it broke out, it was a pretty unpleasant sell-off yesterday. It bounced back today. So sometimes it's better just to let the earnings settle, whether it's a few minutes or even a day or two. It came up, now above some of these short-term levels that we've had along the way in this consolidation. I mean, honestly, it'd be ideal if it could just form a handle right there, let the moving averages catch up, kind of situation, because it's well above the 50-day line. It's significantly above the 200-day line. So that would be nice. We'll see what we get. That would probably involve the market pausing a little bit. And so we haven't really seen that. But I think that is what you might be looking for. You could be adventurous and say, I'm buying it, but knowing that there's still the fairly high risk of a pullback given that really sharp run up, from the lows about a month ago.
And Onsemi is IBD's stock of the day today. So for more on this stock, make sure you check out that article that you can get to right on the homepage. We have a little square that you can see the chart for the stock of the day. So definitely check that out. And next on our list, let's check in on EQNR here. Or is it KBR that we
KBR, EQNR we looked at yesterday. EQNR is a fine stock to look at, though.
It is Ed's call. He's telling me KBR here. So by the end of the day here, closing down just fractionally on earnings. So really recovering off of the lows, Ed.
Yeah, had mixed results. I believe earnings topped and sales were a little light. But yeah, it came down to its 21-day line, but bounced and actually was higher for much of the day. Obviously, the market fading off again didn't help. But it closed above what we're calling a double bottom base at 52.25. So it held that buy point. So, ultimately, that was something, again, where if you bought it ahead earnings, boy, it was a little scary there. And again, sometimes they come back and sometimes they don't. And so, now it's like earnings are out of the way. You could choose to buy it or not. With this out, there's some other peers that are coming out, but the growth is still pretty solid. There's reasons to think that with a new tax and climate bill and the infrastructure bill, that there might be some, like decent spending patterns going forward for years to come. But again, it's usually better to wait for earnings to come out.
Yeah, it is. And you're right, it can be so tricky because there are times where that opening 5-minute bar is the lowest price it sees essentially all day, and it doesn't look back. But there are many more cases where if you bought right at the open, you could be shaken out later in the day, or it's just one of those things where if you take a look at that intraday chart, it can just help put the odds in your favor. Make sure that first minute bar is strong, and if not, just wait to see, will it recover? Is there a spot on the intraday chart that you might see a potential buying opportunity? And not only can you apply that to stocks moving on earnings, but others too. I mean, I think Li Auto is a great example of how at times yesterday and today it looked strong, but if you would have looked at an intraday chart, that may have helped you navigate some of that action there.
Yeah, and I will say all of this reflects sort of a choppy-ish market and a market that still has a lot of pullbacks, just making it trickier. I mean, look, we'd all like to go back to 2020, and we'd still like it to be
all the earnings gaps, right?
All the earnings gap, and all they do is go up, and it drops to the 10-day line and then keeps on running. That isn't going to happen again for a long, long time. So it's just trickier. You just have to navigate and find a style that works for you.
Yes.
Because some of these things are difficult. Usually when they talk about, let's see how the dust settles. Well, there's a reason. It's nice to have the dust settle and get a clearer picture on what's going on.
Mm-hmm. And that first 5-minute bar strategy isn't going to be a fail safe, but again, it can be helpful, at least to prevent you getting sucked in right at the open, and that's the high of the day. And speaking of, here's a look at Harmony Biosciences, which jumped on its earnings report, closing at more than 12% today in strong volume. Accelerating revenue growth here, up 45%, bottom line growth of 54%. I will disclose that I did take a nibble at this early on in the day, Ed. Not in the first 5 minutes. I waited a little bit, but I did take a little nibble here. Your thoughts on the action?
It was really nice action. Yeah, it was a gap up and really showed strong action after pausing just like in the first 5 minutes, and was held up very well. I mean, this is one of those things where, again, it had pulled back to the 50-day line, and we'll see it with some other numbers. There's some other biotechs that are doing similar action, but sort of a trend line. You could have even done that tighter like that, gapping above that level, clearly breaking the trend line, strong growth. But people who bought the prior, there had been the original buy at breakout, they didn't have to sell. They might have chosen to sell because they had lost a lot of their gains, don't get me wrong.
Mm-hmm.
But it was the follow-on buy that folks may have needed to say, I'm backing out, because this was coming down significantly ahead of earnings. Now with earnings out of the way, yeah, you're paying a higher price, but that risk is off the table in a way. So yeah, that made a lot of sense. It was nice action today. Hopefully this can keep going, because biotechs and drug makers have paused a little bit, but they could, they're still, you can just look at that chart, you look at the RS line, and you look at the growth on this company. There's a lot of things to like about this stock and company.
Yeah, we'll have to see. And now it's vying for that new high territory. Cleared a lot of resistance as well after getting above, into all-time highs a couple of weeks ago, dipping back below it. So we'll have to see where it closes this week. And like you said, if it can keep it up. And it seems like, Ed, we're still in an environment where stocks are guilty until proven innocent. So instead of giving things the benefit of the doubt, taking gains when you have them, even if it's partial profits.
Taking those partial profits, a good idea. Try to find the early buy point. Sometimes that's the official buy point, like with Harmony, but try to find the early buy points and try to buy relatively close to that when to an entry when they present themselves, because you want to try to get as much of that cushion as possible. So being nimble on your buys and on your sells, still very important. Portfolio management, and still waiting to see the market really improve, to really let loose with the exposure and really holding for longer gains.
Exactly. All right. Well, thank you, Ed. And coming up shortly, we have our leaderboard scorecard. So if you are a leaderboard subscriber or trialist, make sure you go to leaderboard.investors.com, because at 4:30 p.m. Eastern, we have our monthly webinar. So we'll update you on July performance, talk about some trades that we made during the month, strategies that the team is utilizing in current market conditions, and we'll be taking your questions too. So join us once again, investors.com, go to leaderboard. You can also get to it with leaderboard.investors.com. So we'll see you there. And tomorrow morning, another important announcement. Mark Minervini returns to IBD Live. So now that market conditions have improved a little bit, what's his take? How is he positioned in the current market? We will find out in the morning. So tune in, investors.com/IBD Live for that. We'll see you there, and we'll see you right back here tomorrow at the close.